And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Prep. It is Thursday, April the 6th. My name is John Hoagland. Thanks for trusting with your time as usual. We're going to be focusing on trying to find accurate context in these markets, always thinking about risk management and remaining patient in our trading. Good morning to you all, my futures family. If you're already in the markets, hopefully things are going your way. We just had some economic numbers come out that are a little bit confusing. It always seems, and I agree, Shaw, it's another day of pre-market head-scratching after the numbers release. The jobless claims came out. Now, the initial jobless claims were expected at 200,000. It came out at 228,000. Last month's, or the last release at least, was at 198,000, but it was revised to up to 246,000. So a lot of folks in the media are calling this a drop in initial jobless claims when it was expected at 200,000, came out at 228,000, and there was an adjustment of the last release much higher. Same thing in the continuing jobless claims. They were looking for 1,699,000. It came out 1,823,000, but with the revision of the previous release that was 1,689,000, they're calling it 1,847,000 now. So it looks like a drop in both, but it was higher than what was expected all around. So how is a trader to digest all this information? What does it all mean? Well, the markets are going to let us know. It's our job to find ways to profit from that. We have 9 o'clock, James Bullard speaking, and at 9:30, the natural gas numbers still due out. Now, today, for all intents and purposes, is Synthetic Friday. No trading tomorrow. Markets are going to be closing early. We're going to have only about 45 minutes after the unemployment number tomorrow for the markets and for traders to digest and adjust inventory. So it's likely to be a volatile, wild, illiquid morning tomorrow. I'm not going to be doing a market prep because we're not going to be doing any trading tomorrow. I'm probably just going to watch the fireworks, laugh a little bit, and then go on and do some things around here that I need to do. As far as things going on today, the U.S. stock index futures looking like they're going to be opening lower. They were a little mixed earlier, or they're all on the downside now. But with the jobless claims numbers and after JOLTS and the ADP, I think these numbers are indicating that the job market is cooling. It's coming up. It's coming off a pretty hot period of time. So I think that the Fed is hopefully going to be pleased with the idea that the job market is cooling. It's something that they've been aiming for to help stave off inflation and recession. Who knows how good of a job they're doing at that. But investors will have to hedge and adjust inventories today prior to tomorrow's unemployment number. They're looking for that unemployment number to be the percentage to remain at 3.6% with non-farm payrolls down to 239,000 from 311,000. Well, we'll find that out tomorrow, right? We have crude prices continuing to consolidate after the EIA's 3.7 million barrel drop in inventories. Again, that's per the EIA. So still tightening inventories. The market's still digesting what happened on Sunday. Very range bound. Again, we'll take a look at that on the charts here very shortly. We've got the VIX up a little bit this morning. 1957 when it was 1961 yesterday. No real change. The dollar index up slightly this morning, last I checked anyway, at 101.9. It was 101.58 at this time yesterday. And the yield on the 10-year yesterday at this time, 3.3%. This morning, 3.28%. So no major changes as far as that is concerned. And as always, I'm going to ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep. And make sure you subscribe to our YouTube channel so you get notified when we do go live. We do have Make Hogue Money today. I'm going to put the link in so you can register and join us. That's right after the prep here, right about 8:30. We'll take an hour and see if you guys can find some trades to make me some money. And we look forward to seeing you there. Also, last thing today, the podcast, the Limit Up podcast with our good friends Jack and Dan. They will be presenting the podcast today. I'm always looking forward to seeing them on Thursdays. And then that's it. Going to be it for me for the week. I don't think I'll be doing anything tomorrow, and I know I'm not going to be trading overnight. I like to sleep, and I don't like trading overnight. So, good morning, Brian, first in the room, winning the prize. Shaw, happy Thursday to you. Scott saw, and he conquered. John, good morning. Yeah, Shaw, another head scratcher. Stephen, good morning. Jason, Taurus, Hegel Matters. John, my brother Rick. Randolph, looking forward to seeing you during Make Hogue Money, hopefully. Bill, good morning. Sarah Hall, prayers and love to you. Tim, good morning. Good morning, Marcelo. Bear goes long. Lacey is currently protecting the front of the house, just looking out the window, making sure that no dogs walk by unbarked at. Joe, good morning and peace to you. Nastek, good morning. Robert JD, good morning. George, the center of the universe, is protecting her corner of the universe right now. Alfred, good morning. Anissa, Henry, Rooster, Vlad, Rusty Golfer, RCU, Terry, good morning. Alejandro, Aziz, good morning. Data F Trading, good morning. Snowflake, Eric, nice to see on your bookshelf you have a certified, oh yeah. How many resets did it take? Well, I don't know. It's as far as being a career trader, it's taken a lot of resets. It's never a straight line. It's a good question. Oh, that's good, Eric. Thank you. Dowitzer, Will, good morning. Timothy, Marks, Jason, and Vince, my guy. It's good to see everybody this morning. Yeah, it's going to be a long weekend. I'm going to miss you tomorrow. I'll be watching the markets to see what happens as far as this release is concerned. And, well, I'll be looking forward to seeing Dan and Jack on the podcast this afternoon. Anything else? Happy Good Friday tomorrow to those of you that celebrate, and happy Easter on Sunday, again, to all of you who celebrate. And we're looking forward to seeing what we've got going on today. Good morning. Stephen, back in Atlanta today. JT, good morning to you and to Bluebell. It is, what is it? 33, but sunny, and we've got a warming trend coming. It looks like the rain has stopped here for the next couple of weeks, and we're going to be seeing some 60s and maybe 70s for the next couple of weeks. Finally, I'll be able to get out there and clean up the yard and do some yard work, and I'm looking forward to getting the yard in shape for the summer. And I'm seeing your thought here, Henry, and I just want to talk about this for just a second. Henry's asking, speaking of resets, any words of wisdom for resets? This week wasn't good for me. The one thing about resets is, we don't want you to reset. If things aren't going well in your account, if you're down, if you're near your max drawdown, size down, try and dig your way out instead of just hitting a trade and saying, screw it, I'm just going to see if this works. If it works, great. If not, I'm going to reset. Try and dig your way out. Size down. Look for good opportunities. Because when you do that, you prove to yourself, number one, that you can. And the opportunity for you to to dig in, slow down, dig your way out of that hole is going to make you a better trader. There's an analogy, I guess, that I use sometimes in this case. When I wanted to learn how to play the guitar, I was in bands, I was a drummer, and I thought, I'm going to learn how to play the guitar. It make me a better drummer if I understand what a guitarist needs from a drummer. So I had an electric guitar. It was my brother Rick's. It was a nice Les Paul, and I started learning to play on that. And then somebody suggested, if you really want to be a better player, learn to play on a steel string acoustic guitar. You'll be a better player because of it. It's more difficult to push the strings down. You get these calluses on your fingers, and you're going to be a stronger, better guitarist if you learn on an acoustic guitar. So instead of just hitting that reset, slow down, try and dig your way out. You can learn so much about trading, about markets, and more importantly, about yourself by doing so. Okay? There's a lot of suggestions, and these are all good suggestions. You can't carry the venom. That's one thing for sure. You can't let that poison linger. Learn from it. Okay? All right. JD, give yourself time to learn. We all want to make money, but this is a skill. Be patient with yourself in the learning process. I said something the other day I thought was really kind of poignant in a meeting, and I said, there are people that just want to try and make a lot of money trading. They're not really interested in being good traders, and it's kind of like getting really good at Guitar Hero, but you never learn how to play the guitar. What do you really want? So, and one of the best traders I ever knew, when I asked him how he was able to make so much money, he said, that's the wrong question. He said, my goal when I started this was to be a good trader, to learn to make good trading decisions. I learned to make good trading decisions, and I consider the profits a byproduct of being a good trader. So you can do this. You can do this. Just take your time. All right, let's jump into the charts. And then you get the S&Ps up here. And let's see what we're thinking, and we'll see what we're looking at today. So what I've been kind of suspecting is quite possibly coming to fruition. We've lost volume and open interest, at least in the S&Ps, on this pullback. The preliminary open interest number is that we lost 6,900 in open interest on the down day yesterday, and we also slowed volume. This is typical of a bull flag. I don't know if we're creating a bull flag. We never know until the bull flag breaks out, but it is possible. The upside medium time frame structure, I'm calling that, is still intact. Look at the 4-month balance that we're really in. I mean, this goes back to November, December, November, the December low, the February high, the March low, the March high. In essence, this is just a big, long area of consolidation and balance when we're kind of at the upper extreme. And we've had a pretty decent move to the upside. So the market was telling us on, Monday, that this auction to the upside is tired and needs a little bit of rest. Well, it's had a little bit of rest. It's adjusted inventories. And we're getting a hint that maybe the job market is slowing, and maybe the Fed can start to ease up on their at least the pace of rate hikes. Who knows what's really going to happen? The market yesterday told us that the downside auction did not succeed very well. It did not bring volume, and it lost open interest. Keep that in mind today. Okay. See, look at all this great advice. Look at JT. Focus on the process, not the results. Really good stuff. Really good stuff. Head and shoulders formation. Well, this here. I don't know if we got a long way to go to start to form the head here. And let's see on the 30-minute chart here, Mr. Rick. All right. So here's that high. Anissa was asking yesterday. Well, you said that the high in the overnight, isn't a good thing, and it's not. It's gonna be important when it becomes important. Just like a lot of the weak structure that we've left down below. But this move to the downside yesterday didn't interest sellers. Sellers backed off. Volume slowed. All right. So, I've got this trend line here, maybe 1, 2, 3, almost 3 points of contact. I've got this trend line here, 1, 2, 3 points of contact, 4 points of contact, and we're above that now. So, does this constitute a breakout of a bear flag? Well, only if the market continues higher. Now we've got new information. The market is opening really with very little overnight inventory. A pullback to this trend line here might be something interesting for us, but that's going to bring us all the way down here. So what I'm doing is staying patient. Why? Because we're in value. There's no real overnight inventory. Overnight inventory got too short, got too long, flattened out. We're in the middle of value. I believe that our best trade location is going to come later on in the session today, at least somewhere, after the first half hour or hour of the day. We'll see on Make Hope Money how that works. But that's just my thought. Is I'm going to try and stay patient today. Everybody knows that it's a holiday yesterday, and a holiday with a major economic release. People are going to be just positioning themselves today to protect themselves for what might happen tomorrow and possibly for even over the weekend. So there's going to be a lot of hedging going on. A lot of hedging. This is yesterday's profile. This is last night's profile. We have an inside regular trading hour range. We have a low excess low. We have a low excess high. It's a normal variation, a normal variation, neutral day. There's no change in the perception of value now. So try, if you can, stay patient. We've tested down to the anomaly that we have down here. That is 4105.75 in the overnight. We're going to see, we're going to check that in the regular trading hours too. If we look at this without the overnight, that little anomaly is an actual one, single anomaly. It has not been revisited in regular trading hours. It's a visual target for the marketplace. So our overnight low, overnight high are really going to be the areas that I'm going to be focusing on this morning on anything that I'm going to be doing. It's the closest thing we have to reference in today's time frame. Rick, the labor market's slowing. How can that be positive for the markets? Well, in the long term, it wouldn't be. But if it seems that everything that is bad for the markets is good for is good for the Fed, right? They're trying to reduce inflation, so if they have fewer people that are capable of buying things, that's going to lower inflation, and the market seems to like bad news and dislike good news these days. It's kind of upside down, right? But that is going to change whenever it is. We got the dollar spiking. All right. So again, I'm going to be focusing really on the extremes of the overnight here for anything that I'm going to be doing in Make Hope Money, or at least suggesting that. If somebody was asking, what was Ben's idea for the long yesterday? Well, he was looking at something in a little bit shorter time frame than we have the opportunity to look at here. All right. Okay, crude oil. We added a whole bunch of open interest. We've been adding open interest since down here. We keep adding it. We added another 21,000 in open interest here yesterday. Volume not doing all that well, though. We're day 3 here in this area of consolidation. And, with open interest increasing, it's indicating that the market is building energy, just not showing in volume here just yet. So we're looking at balanced breakout rules applying here. Balanced rules. We fade the extremes until there's an acceptance outside of balance, and then we go with it. Here's the 30-minute chart. All right, so this is the profile, the volume profile for the whole area, the whole week, because this is an island week so far. What are we looking at as far as today? Well, it's kind of the same thing. Overnight inventory is mixed. There's no real big overnight inventory. The market's opened in range and in value. Value high and value low from yesterday are here. Point of control is settlement, which is 80.61. But the point of control for the whole week is right here. It's 80.44 approximately. Value high for the week is here. Value low for the whole week is here. It's a very narrow range. It's a very narrow value area, and the point of control is very centrally located. So the market is using up a lot of its energy just in two-sided trade here, and open interest continues to increase. So if we break out above, we go with it. If we break out below and accept, we go with it. Anything in the middle, to me, is a reversion trade. I'm going to be patient, wait for the extremes to establish either in the daytime frame or the extremes of the week to look for some bigger opportunities rather than trying to get involved here where everybody is involved and get chopped up. Take a look at the TPO chart. So yesterday, normal variation, upper extreme of the initial balance was the high of the session. Normal variation, extreme day, almost a P shape, but we lost open interest, basically inside the value area of the previous day, and the previous day's value was outside the previous day. This market is really exhibiting balance here. I mean, it found its place, and it is two-sided trading. There's a two-sided auction here, and until that changes, I'm going to be patient in the middle and focus on the extremes. Our overnight low looks very interesting. Even our overnight high here looks very interesting because it's above value of the whole week. It's above value from yesterday. It's this is an opportunity to learn something about range trading as long as we remain in range. Take a look at the NASDAQ now. The NASDAQ is similar but different than the other equities. The long time frame structure where the S&P is range bound, I mean, we're putting in higher lows, we're putting in higher highs. The NASDAQ, suffered a much bigger setback. It was down 35% off its all-time high, where the S&Ps was down around 25%. It's got further to go to recover. So we're looking at a longer time frame upside structure. We're looking at medium time frame to short time frame structure that is to the upside. But the volume yesterday was higher. The open interest increased on this pullback yesterday, and an additional 5,300. Some naysayers came into the NASDAQ yesterday. There are new shorts, new business to the short side here in the NASDAQ. So it's a completely different story than the S&Ps, at least right now. We're not really forming that bull flag here. We're actually bringing business into the downside, where the S&P is cutting off business in short time frame to the downside. Take a look at the 30-minute chart here. Alrighty. So a B-shaped profile indicating a long liquidation, but we also added 5,300 in open interest. Very interesting. Look at the overnight. Value high, value low. Value low, value high, value low. Close to value high, value. This thing is just range bound inside yesterday's value area. We have not quite finished an unchecked or unfilled gap from last week here. In regular trading hours, we did in the overnight. Again, I'm going to stay patient. I think that there's a higher probability of the Nasdaq continuing to the downside than the S&Ps. One could bring the other down, and of course we don't know what Bullard's going to say or what anybody else is going to say. Anything can happen. ACH. That's one of the things we say here on the market prep is ACH. Anything can happen. So the B-shaped long liquidation not supported by open interest. Take a look at the TPO chart. So there's that B shape. We would look to see long liquidation on this. This is a situation where a profile where you will see occasional long liquidation. We have a very weak low here. So we have excess at the top. We have an unfinished gap below. We've got all kinds of visuals down below. The nuances for the Nasdaq and the nuances for the S&Ps are very different. That wouldn't surprise me if the Nasdaq was the leader to the downside today, if indeed it is a leader to the downside. We don't know what's going to happen. That low excess low worries me. We have excess on the, excess at the high yesterday. Normal variation day, I'm calling this, with an extreme because the point of control is so low. How about gold? Yeah, everybody is now all of a sudden reinterested in gold, right? Are we forming a bull flag here? We lost 300 in open interest yesterday. No real change. We lost a little bit of volume as well. So did we get a little bit of long liquidation here? Volume lower, open interest inert yesterday. It is digesting higher pricing. The upside structure remains intact. Weekly kickoff high. Boom. Range bound? Are we seeing lower volume and open interest yesterday? Yeah. We got a slightly lower low here, lower high. Yeah. If we continue to lag as far as volume and open interest changes to the downside, I could see this whirling around at some point and taking out the high of a potential bull flag. I don't think it's a bull flag here just yet. It just seems to be looking like one. We've got overnight inventory to the short side. That doesn't seem to be bothering anybody. If we're seeing a spike in the dollar, as my brother has suggested, and we are, getting a nice little pop in the dollar, makes sense that the gold is taking a dip here. Here's the profile from yesterday. Excess low, low excess high, normal variation, neutral trading day. Neutral here, possible change. Love to see a pullback on this market. Find some structure with which to lean on to limit risk and look for your opportunities lower. Take a look at the euro, which should also be taking a little bit of a dive here. Our upside structure is intact. We did add 1,400 in open interest. Maybe some naysayers coming in here, which is not a bad thing. Inside extended trading hour range yesterday. So you can see yesterday's extended trading hour range was inside the previous day. Open interest and volume just basically maintained in that range. Here's the 30. There's our range from yesterday, inside the range from the day before. The motion to the downside indicates sellers coming in and new shorts maintaining position here as we open. No real overnight inventory here on the open. We're testing our overnight low right now. This looks like an interesting spot for an execution. There's probably a couple of nice smallmouth bass around here somewhere if you want to sink a line in. Which side of the boat, I don't know. but just the overnight low looks like an interesting spot for us. Here's the TPO chart. Double distribution trend day yesterday after a double distribution trend day. We opened between, if you remember, I believe we talked about repair yesterday. Well, we repaired. We traded to this point of control. We traded to an assumed point of control down here by the end of the day. We opened, I believe, somewhat in repair territory for yesterday's repairable day. But right now we're showing signs of rejection. So if I'm going to be looking for longs, if I'm going to be looking to catch those smallmouth bass, I need some sort of structure. And I'm going to be looking for daytime frame structure to lean on to limit risk if I'm expecting this market to rotate back to an assumed point of control in the upper distribution from yesterday. 10-year. So volume maintained yesterday on a push above weekly kickoff high. We didn't really maintain price up there all that well, and we lost 19,000 in open interest. That's a little confusing to me. This is a little bit confusing up here. I'm not quite sure what to think of it. There is the specter of slowing rate hikes, and I think that's part of the reason we've been keeping our upside structure intact here. Take a look at the 30. And here we are in range, in value. The open in range checked the high from yesterday, back in value, checking the low. We've got an unfinished gap from yesterday, naked point of control here. This is a very target rich environment here yesterday. I think we talked about that yesterday morning. If we get up here, there may be a whale here, but a whale looks like we're going to have to wait for. Here's the TPO chart. So matched yesterday's high, testing to the overnight low, which is exactly yesterday's low. We do have the little gap here, and below that we do have some visuals with which to go back and fix. But right now, this market is just trading in range and basically in value. I got to stay patient. What about the natural gas here? Nat gas. Dragging, price idling, balancing. Added 1,000 in open interest yesterday on decent volume. It's a two-sided auction that is in process. Balance to breakout rules apply. When we get to extreme of balance, we fade it. When we break out of balance, we go with it upon acceptance. Acceptance, I understand, is a very subjective term. So here's yesterday. We got a volatile morning going here. We're waiting for the nat gas numbers at 9:30 Central. So I have to see how that plays out. But balance to breakout rules apply here. If we were looking at this as an extreme of balance up here, we would be looking for shorts here to help us limit risk. If we're looking to maintain balance rules here, we get down near last week's low, this week's low, we would look to fade the extreme here, unless, of course, there's an accepted breakout which we would have to go with. Those rules sound easy, but it's rarely that easy, or rarely, if ever, that easy. Take a look at the TPO chart and let's get moving on here. It's getting a little bit late. All right. Normal variation trading day, neutral, excess low, excess high, tested to this visual. We got another visual down here to test to. We've opened between these 2 points of control. It would make sense to me to see this market rotate to this point of control and rotate to this point of control. Kind of go into a bit of a repair mode today because of where we opened. IB high, yes. All but one of our markets that we just looked at had one daytime frame extreme at one of the initial balance extremes. All right. So I see that there's a lot of questions and a lot of things oh, hello, Denise. Haven't seen you for a while. When looking at volume, can you differentiate between sells and from longs getting out and news? It is not anything that you can see, JD. What you're discussing is basically being able to see open interest on the fly. And now there are platforms that claim to be able to estimate it, but I don't believe it because there isn't a platform in the world that can tell, in real time, whether somebody is getting into a position, getting out of a position, whether that position was transferred to somebody in a new position, or if they're getting out of positions. It even takes the exchange until about 9 o'clock the following day to find accurate open interest. But you can tell, when the market is trading more on the bid or the offer. It's one of the things that we look at is that delta. Okay, all right. I've got to get ready for Make Hogue Money here. We're a little bit late. Take your deep breath. Stay grateful, humble, creative, and centered in your trading today. I'm looking forward to seeing you at Make Hogue Money. If not, trade well today. And see you for 3 o'clock for the podcast. And other than that, have a wonderful Good Friday tomorrow and a blessed Easter on Sunday. Continue to be kind to yourself, be kind to others, and say a prayer for peace. We need prayers for peace. Have a great day. See you soon.